Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about USDJPY because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can see is that the market has just tested a very strong level of previous monthly resistance, which was turned support here. And as we tested this previous resistance turned support, the market started rejecting it to the upside. And in a situation like this, what you would expect is for the market to create more bullish continuation, since clearly we are in an uptrend, and then inside of an uptrend you would expect the market to create a series of higher highs and higher lows, not just go up in a straight line. So we do need these corrections in order for new buyers to enter into the market. Now in this case, what we can see is that the last movement was a very strong move to the upside with a very strong impulse without seeing any kind of corrections. So in this case, what we could expect is for the market to actually start a correction before then creating more bullish continuation. So at least in the short term, we could expect some short-term bearish price action. Now, dropping down on the weekly, what do we see? Now, from a weekly perspective, we can notice how the market has now created this overextended W formation. Now, in general, after the creation of an overextended W, what you expect is for the market to create a move to the downside to go and retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this low to this high. So what we would expect is for the market to create a correction at least to this 0.32 of the Fibonacci taken on this weekly impulse, which is currently lining up at this area. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can see a pretty overextended market as well. And in a situation like this, we have a new downside first target, which would be the 0.32 of the Fibonacci taken on the daily impulse in this case, which would be lining up at this area. So from a daily perspective, it seems pretty clear that the market is overextended to the upside and in need of a correction, and we would have a first potential downside target at this zone, which is the 0.32 of the Fibonacci taken on the daily impulse. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the JPY, we can see how lately with the last reports, we have seen net positions growing from minus 81k to minus 77k. We had almost 1k shorts getting closed and 3.1k longs getting added, making the JPY stronger because we're seeing longs added on it from an institutional perspective and shorts getting closed, which makes the JPY stronger. And a strong JPY is exactly what we need if we are to create this move to the downside, because always remember that all currencies on this spot are traded against the USD. So if you're checking the data for the JPY, you're actually checking JPY USD. But if we want USDJPY, which is what we want in this case, we simply have to invert basically whatever we are reading here. So if we're reading JPY USD and we see longs added and shorts closed, on USDJPY we would see shorts opened and longs closed. From an institutional perspective, favoring shorts, which is exactly what we were already expecting by looking at the technical side of this market. So how we could be approaching this potential rejection to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market, and provide to us one of our valid entries. At that point, we could be looking for a potential move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you can gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you can gain access with a big upfront discount. And since I have partnered with the Forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, then a pricing will increase once again. So I really suggest that you take advantage and join directly from here and gain automatically access with the email and password that you will create during the checkout. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.